the second half here. So we're going to talk about real estate investors maybe supporting the real estate market. And I was kind of surprised by this, but so far in 2025, investors have accounted for roughly 30% of all sales of both the existing and newly built homes. That is the highest share on record. And we are looking at lower sales volumes, but to kind of see investors, they're kind of holding up the weight of those sales, I would say.
Highest share on record since they started tracking 14 years ago. So
Yep.
It's not,
Forever,
not a huge
Since
time.
the 1800s.
But yeah, but still, 30% of sales is pretty large. And what I thought was really interesting about that is most of those investors were small investors. So that means investors with fewer than 100 homes. 100 homes isn't, might not think of that as small,
Yep.
but, of investors who owned fewer than 100 homes, they accounted for 25% of all of those purchases. So 30% was investors, and then 25% of the whole was, small investors. So only 5% of purchases of new and existing homes were large investors.
I know, because you always hear clickbait like, "Oh, BlackRock is buying up all the homes out there," and it's like, no, like, not really.
Apparently not.
Apparently not. Here's the data for you, and this is something that I'm going to say kind of scares me a little bit. But within the small investor space, again, you said fewer than 100 homes. I'm like, I don't know if I'd qualify somebody that owns 99 homes a small
I think
real
that's
estate
a lot.
investor.
Yeah.
But people that have just 3 to 9 properties, they accounted for between 14 and 15% of all sales each month this year. That to me is a little bit concerning, because do they have full access to good data? Are they really looking at buying real estate fundamentally? Are they like, "Oh, I have a friend that made money in real estate. I heard I should be in real estate." They're not looking at the dynamics of the property. And are they maybe over leveraging themselves to just buy property?
I think that's a lot of it. And 3 to 9 properties, I would define more as a small investor. And we have seen it. We have, 800, 1,000 clients, whatever it is. A lot of them own real estate. And we've seen people who, buy a property because it's real estate. Yeah. And Chase and I, we both own homes, so we have real estate too, but we don't have investment real estate. But it's people just have this emotional connection to real estate where they just want to buy it. Whether or not, who cares what the numbers are, but I'm going to buy this. Okay, I'm going to get a loan. I'm going to pay that mortgage. I'm going to rent it out. And we've had people that, buy property, they make their down payment or whatever, and they're losing money every single month because the rent that they can get, and they go into this knowing that the rent is not going to be enough to cover the mortgage and the taxes and insurance, let alone any repairs or vacancies that come up, but they do it because, it's real estate.
Yeah, and I think kind of in relation to the big companies here, the big companies are looking at this as a business, which is why I'm kind of following them. And the big companies, including like Invitation Homes and Progress Residential, those are 2 big public REITs, I believe, or big public owners of real estate. They've actually become net sellers in the market and are selling more properties than they are buying, likely due to reduced rents from the high competition in the rental market and a softening of the overall real estate market in certain areas that has not provided, the key word here, the expected return that they wanted. For these big companies, they're looking at, this is what our expectation is for a return. This is what our expectation is to get rental income. This is what we need the rents to grow to justify this investment. It's all based off the numbers, where the small investor doesn't look at that. Mm-hmm. If you ask the average small investor, and there are plenty out there that are very good real estate investors, so I don't want to knock all the small real estate investors here, right, but there are many, unfortunately, that I think are like, "Oh, yeah, no, I own real estate." Well, how are your returns? Like, what is your percentage gain on it? What is the ratio that you're getting in rents versus all the expenses you're paying? The average person doesn't know.
I've never had anybody tell me what their return has been on real estate. Also, for a grain of salt, a lot of people don't know what their returns in the stock market has been either. But with real estate, the return is more difficult to calculate because you have the influence of leverage, you have rents, you have vacancies, you have varying expenses and maintenance that come in. So it is difficult to keep track of what those returns are, especially if you have multiple properties. But the big investors are becoming net sellers of this, and a large part of that has to do with interest rates. Yeah. When interest rates are low, it was very easy to buy a property and then get enough rent, because rents were still going up. You could get enough rent to pay your overhead, so your cost of leverage and everything else. As interest rates have gone up, that hurt cash flow, which is one component of it. But then B, because of the higher interest rates, that slowed down the appreciation of properties. And these large residential, home buyers were banking on real estate prices appreciating at a certain point. And since they haven't, then now they're looking at selling because they don't have the cash flow, but they also don't have the appreciation to make up for the reduction in cash flow.
Yeah, and my concern too with the small investors, I think they kind of lag generally. So the big investors are doing it now, and then all of a sudden, maybe 3, 4, 5 years down the road, the small investor would be like, "Oh, I haven't made any money," or
I don't think they'll even know.
I don't think they'll know. But my bigger concern is if something bad were to happen in the economy, they would be the most likely to not have the means to continue holding on to those investment properties.
Or they would do so at their detriment, like withdraw from their 401k, pay taxes and penalties to keep paying their mortgage, or, to do things like that. Yeah.
Yeah, I think that is just, again, something to kind of keep an eye on, I guess, with the real estate market. And, we've been, I'm going to say, big believers that the real estate market, kind of like the stock market, is not going to appreciate the way it has over the last few years. I think the real estate market has seen great appreciation. It's done very well. But just kind of being more realistic with your expectations on returns are so important now if you are looking at buying a property. And if you are looking at buying a property, please break down the numbers. It's so important to understand what you're investing your money into and making sure you are getting positive ROI or positive return on investment.
Moving on here.
Let's move